Hello, this is All in Danger. I am your technical trader. In today's video, we will be discussing how to predict tops and bottoms using topping tails and engulfing candles. Before we begin, please make sure to like and subscribe for more of this type of content. Now, let's get to it. We need to understand a few definitions before we start. By now, I think you've understood that stocks don't always move up in one straight direction. The top and bottoming patterns that we will be discussing will help you predict the tops and the bottoms of these things so that you either can buy the bottoms and catch the uptrend, or sell the tops or short the tops and catch downtrends. Okay, let's talk about topping tails and bottoming tails. The first one here is a red, so we know that it's closing red, which is lower than it was, which is a topping tail. So the way you can tell that it's a topping tail is because you have this small body and a huge tail, right? So what we're looking for is basically that this body will close on the lower 25% of the entire body, right? So if you were to divide this into fours, we have 1, 2, 3, 4. If the candle has a huge tail and close, like start the next candle from the lower 25% of the entire candle, it's a topping tail. If it happens when the stock has reached a new high, right? So if it hits a new high and you see this huge tail and it closes at the lower 25% of the candle body, it's a topping tail. The same goes for a bottoming tail. So on the bottom, we want the candle to close green, and we want it to be closing at the top 25% of the entire candle move, right? That's a bottoming tail. It also needs to be happening at a new low when the stock prices go down, right? Kind of goes in the definition. You're calling a bottom after the stock has gone down and found a new bottom, and you're calling a top when the stock has gone up and found a new top. Here's an example, not the perfect example, but an example. This is the Google chart. When the COVID-19 crash happened, we fell all the way down. We did not have any bottoming candles or bottoming signals until we had this candle. Here we are breaking it down. So we had a tail that came down and hit a new low, right? And then it came all the way back, created this long bottoming tail. And if we take the candle and break it in to four, you have 1, 2, and 3, and 4. For it to be a bottoming candle, we need the close of the candle to be above the top 25% of the entire move. This is really close, but it counts, right? It's top 25, huge body, new low, close above. And like you can see, that was the bottom of the COVID-19 sell-off for Google. This is also in Google. We have a topping tail. So you have a huge tail that comes up, hits a new high, and sells hard off, right? And closes at the bottom 25% of the entire candle. You might be thinking, but this was not the top because we have this that's higher. Well, this was the top. Like with all rules in stock trading, these are signals. They're not guaranteed moves, right? So a topping tail signal means that there will be a higher probability that it's going to go down, and a bottoming signal says it's going to be a higher probability of it going up. This topping signal is still in play, like we say, as long as this top does not get taken out, right? These candles that come after could go up and be really close to the top, but the topic signal is still in play as long as it does not get broken. Here you have an example of topping tail, and then a higher move not past this signal, and then a crash or a change of trend, basically. Next up are engulfing candles. Same thing goes for them. They need to be happening at a new high or a new low, right? So this is a combination of two candles. We have the bottom signal where you have a huge red solid candle, and then the next candle that opens below this close and basically engulfs the entire last candle with a big reversal. The combination of these two is called engulfing candles. Same thing goes for, this is for a bottom when you have a hard sell-off and then a huge bounce. For tops, it's the opposite. When there's a top, we have a huge green candle that closes, and then a huge red candle that engulfs the entire prior candle. Huge up move, huge back move. It's a really strong topping signal. For these candles, the same rule applies because it's not 100%, but the probabilities are in your favor if you take the side that these candles show you that you're going to go. Okay, let's look at Apple. Here, you have an engulfing candle on the 1 weekly Apple chart, right? Here we have a big red body. The next following candle is a big green candle that completely engulfs the last candle. That's a bottoming sign, right? That again happened at the bottom for Apple for the COVID-19 sell-off. Knowing this pattern, you would have known that this was most likely going to be a bottom. We had a pullback down afterwards, but it continued. It never broke this new low, so the pattern stayed in place. During this candle is usually when traders will take a position, will buy here and leave a stop loss underneath this bottom in case they are wrong. Like you can see, it would have been a perfect entry. You can find these signals all over the market on different time frames. Normally, the higher the time frame is, the stronger the signal. Here is a 1-day time frame for Tilray. We have not completely a topping tail, but we do have an engulfing candle, right? A big candle at a new top that is followed by an engulfing candle, engulfing top. Same thing here in Tilray, engulfing top, huge green candle, a new top, huge red candle, engulfing it, showing where it's going. Again, by using these signals, you'll be able to tell with a higher probability where they will go, but it will not give you a crystal ball to the future. So always keep a stop. If you see this happening, keep a stop loss above where you think it's going to go, and never take anything as a given in the stock market.